Yo, what's going on, guys? So welcome to a free market breakdown. Basically, in this breakdown, we're just going to be going through the pairs that I like to trade throughout the week. So my main pairs are GBP USD, GJ, and gold. And if you guys have any questions, let me know and I'll just answer them. So we'll start off on GU, okay? And bearing in mind, guys, there is quite a lot of news this week. So just be careful with that. CPI, I believe we've already had FOMC and there's a couple more high impact news events. So just be on the lookout for that and make sure you're just sort of trading outside of those hours. But if you do find yourselves in a trade during those hours, it just obviously be advisable to move your stops to break even and maybe take partials before the news comes out. Okay, you don't want to be taking any risks during that time. So without further ado, we're going to start off looking at GU on the weekly. Now, obviously, guys, when it comes to GU, you can see clearly that we've been extremely, extremely bearish. Okay, this low over here. You guys can see my screen, right? Double check. Okay, cool. Awesome. Okay, cool. So yeah, like I was saying, go back to the monthly time frame. Sorry, start in the monthly. We've actually just come back down into these lows from the last time we were at these lows, sorry, was 1985, I believe. Yep, 1985, and we actually surpassed that. So when it actually comes to looking at data, when you're trading this pair, okay, there's not, especially during this period over here, a couple of weeks ago, there wasn't actually much data we could have actually looked at in terms of structure, support, resistance to see where price is going. Let me just mute everybody, just in case. Okay, cool. We mute everyone. Okay, so like I was saying, monthly time frame, we've come all the way down to 1985 lows, and we've actually had a nice wick rejection off there. Okay, now with any type of trend, whether it's a bullish trend or a bearish trend, it has to eventually come to an end. We can't be trending bearish forever. Okay, but note that there's only three types of trends in the market: a downtrend, an uptrend, okay, and then obviously we have our sideways moving market, which is a consolidation phase where price isn't making a higher high or higher low, nor is it making lower highs and lower lows. Okay. And with these phases, that's where we have to understand where we are in terms of market structure. Okay. So right now, obviously, when we're looking at the weekly time frame, very bearish. And from this wick over here at 1985, the 1985 wick, we've had a very strong push. So we can just mark this low off just for reference point. Okay, let's just call it 1.3. Let's just call it 1.35 or 1.3. Let's see the coordinates. So one thing I like to use, guys, is psychological numbers. Okay, helps a lot in my trading. So then we're going to go over and head over to the daily time frame. Now, in the daily time frame, you can see structure a little bit more clearer. So you can see anywhere from here, we can see major structure in terms of lower low, lower high, lower low, lower high, lower low, lower high, retesting this previous lower low. Then price has pushed down into this lower low and had a pretty deep retracement back into this area over here. And it is looking like we're not actually going to surpass this previous low. Okay, now when things like this happen, it is obviously it would be an aggressive entry to be looking for buys straight away from here, just because we don't know if price is going to continue this bearish momentum or not. It could just be doing a little fake out, something like this, to then be falling further to the downside. So again, on the daily time frame, not much structure, not clear, so we just move a structure time frame lower. So on the daily, the 4 hour time frame, we can see a lot more structure here now. Okay, and this is where we can start utilizing some tools such as the support resistance, Fibonacci, and so on. Okay, I've actually turned off my moving averages for now, just because I want to trade raw price action and show you guys how easy this can be done. Okay, so from here, you can see how when price hit this area at 1.36, very simply, we made a push to the upside, failed to create a lower low, and instead we made a higher low. Okay, and then from here, we actually created a little double top, but then we had another higher low, then price pushed to the upside. Okay, now with this move overall, if we were to just class this whole move in terms of this point here to this point here, okay, you can see that we've actually taken out a lot of structure in terms of highs on the way up there. Okay, so what we can expect is for price to have a little pullback potentially into this area of structure, which it's kind of had today, okay, to then potentially have that retracement to the upside, which would fulfill that whole daily or weekly potentially imbalance of sells. Okay, now it's still a bit too early for us to for us to tell, so we just have to keep dropping down timeframes lower and look to trade them. But overall, on the 4-hour time frame, what I'm seeing very simply is, if I was to use my horizontal array, which I like to use, okay, we can put our horizontal array anywhere around here, but I like to look at the bodies. Okay, so if you look at the bodies, this is where price is closed. Okay, you can use the body chart to help assist you with that, and just sort of align it there. And then if you want to use a rectangle, you can go from maybe this wick over here. Okay, you can include this wick here, in fact, and down to the body of the next candle there. Okay, make it a bit equal. So let's call it around there. Okay, and let's extend this out. Okay, cool. So now we've got ourselves a nice structure point on the 4-hour time frame. Okay, and on the daily time frame, remember we had the 1.36 level, and one more I'm going to do is I'm going to do the ultimate high up here as well. Okay, so this is going to sort of guide me now. So if I look at the ultimate high again, I'm just going to look to the left, and I see that price was actually respecting this area as support and resistance. So over here we had a level of support. Over here, we had rejections and resistance before price pushed to the downside. And then again, we've had a push to the upside here, rejections and price push down. So this is definitely a strong area, which we can look to plot our support and resistance. And what I'll do is I'll align it. I'm not sure if you guys can see, but if you can see these wicks up here, I'm going to go ahead and just look at the top of these wicks anywhere around there. Okay. And then cover the bottom side of this here. Make that a little bit equal. There we go. And now that we've had that, we can see very clearly, okay, we have an ultimate low, we have the ultimate high of the 4-hour time frame, and then we have like the middle or the midpoint of those two range. Okay, so now we're starting to filter the sections in which we can actually look to take trades off. That's what we want to do ultimately. Okay, but as you know, with the 4-hour time frame or the daily time frames, price can take a long time to get to those levels, and when it does get to that level, you might not get the actual price action signal that you need to take a trade off there. So then we can drop down into lower time frames like the 1 hour and start looking for clues around here. Okay, so looking at the 1 hour right now, there's still not clear direction, but what we can see if we zoom in around here is a definite level of support or resistance around this area here. Okay, and if we were to just trace out the moves of the market here, you can see how price was basically creating from here a higher high, higher low, higher high, higher low, higher high. Anywhere around here you can go for even there. This is minor structure really, so don't really want to include that, but you can see how price is making higher highs, higher highs, higher highs, higher highs, came up to this level of resistance, very clearly created a double top, printed an engulfing candle, which you could have entered off with your stops above the previous high, and then look to target the next level of structure to the downside, which would have been over here. So you can see how that structure just clearly is respecting this higher time frame. This is why I like to go for zones on the higher time frames. Okay, so as you guys can see, they're double top, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Okay, now the question is, now that I've traced out the moves now, so just remember what I've done there, guys. So remember, we started off on the weekly, on the monthly, couldn't find much apart from the low from 1985. Then we found the 4-hour structure points. The 4-hour helped me understand the levels in which the market is going to bounce to and from. Okay, and we found ourselves in high, we found ourselves in ultimate low, and we found ourselves in the middle of the range. And then we dropped into the 1-hour time frame, and then I started to trace the market structure. Okay, when you start to trace market structure instead of just plotting 100,000 different horizontal support resistance lines, you'll actually start to see the waves in which the market is moving. So now, based on that tracing out of the market there, which we did, okay, we could see that we created a lower high, well, a high here, a lower high. Let me just use an arrow, in fact. We created a high, okay, a lower high, a lower high, a lower high. Now the question is here, are we going to make a lower high here as well? Okay, so now we can start actually looking for clues to tell us what price is going to do around this range. And if we were to drop down to the 30-minute time frame, we can now see a structure a lot clearer. Okay, so we can definitely see these two lows over here, which price made a double bottom off. Okay, it actually broke to the upside here, then broke down, but then prices respected it as a level of resistance here. So I'm going to go ahead and mark this area off here. And a few people ask me, you know, why I make my boxes yellow. It's just to help me sort of understand where price is currently, because when you are looking at the charts and prices everywhere, I don't know, it's just a preference thing, but this tells me that price is at this range right now, and I could potentially be looking for a chart pattern at this area. Okay, so now that price has arrived at this area here, I'm looking at the type of price action that price has pushed, the type of price action price has made towards my area of interest. Okay, so one thing you guys need to understand very simply, when it comes to the market moves in two ways. Okay, we have our impulsive phase, and then we have our corrective phase. When you can identify which is which, you will, you know, tend to get the direction correct most of the times. Okay, and that's what you want to do. You don't want to be getting, you know, buys in a seller's market or sells in a bullish market. You want to be able to know which trend the market is in. So if you can see price bombing to the upside, okay, flying, and it's just all blues or whatever color candle your bullish candle is, right? And you can see that clearly with high momentum. And then you see price slowly pulling back. That just screams that price wants to go to the upside as much as possible, but it's just trying to fill in all these buy orders to the downside again, so it can fulfill the next move to the upside. So now when we look over here, what I can clearly see, and yes, this was news, however, price closed underneath right here. It wasn't like a ridiculous wick. Okay, you can see very clearly price is pushed impulsively to the downside. There's not many blues over here. There's not many bullish candles. But now when we look on the opposite end, we can see that price is actually making higher highs, higher lows, higher highs, higher lows, higher high, higher low, higher high. And it's had a wick rejection of our yellow zone at 1.11. Let's call it 200. Okay, now there's a very high potential. We could create potentially a double top at this area, since we have had a lot of bullish momentum to the upside as we've approached this area. Okay, so very simple there. We've identified where the impulsive phase is, where the corrective phase is, and now we can potentially anticipate when the next impulsive phase is going to be in, because obviously, guys, we want to make as much money as fast as possible, but you don't want to have that mindset all the time. But if you guys know what I'm talking about, we just want to be in a trade, in and out, and make our money and get out of the markets. We don't want to be holding risky weather in a condition where the market can turn on us at any time. So, however, because I think the majority of us here are like intraday traders and potentially scalpers, I don't think many of us here, I mean myself, I'm not really a swing trader. I like to be in and out of my position within the day. So if you were looking at the 15-minute, okay, guys, and you were looking at the 30-minute, 100% you could have caught every one or most of these higher lows. Be that messy as hell. Let me just do a circle, right? We could have easily caught any of these higher lows. Now, yes, this is obviously a little bit risky, but okay, one thing you need to understand is if you are going to be a scalper or a day trader, you just want to be in and out of that position within a few hours. So if we took this position here, for example, and you were taking your price out at the next high, that would have occurred within 1 hour. Okay, 1 hour, 15 minutes, maximum 2 hours, guys. You're in your position 4 and you've made your money. How? Well, very simply, if we were to just hone in on this position, okay, let's just take this example here. So I want to show you guys how I'm seeing the market so you can apply it in your trading too, okay? But then we're obviously going to go for a forecast at the end of this. But just to sort of clarify again, prices tanked right from here, okay, to the downside, a lot of bearish momentum. Now that we've identified that this is bearish momentum, yes, we can wait for price to pull all the way back up and then start selling off, but who's to say that this momentum won't carry on? So if you're going to be waiting for price to push down, then push back up, create a double top, and then fall down, okay, that can be safe and it can be very conservative, but you're also risking yourself risking a lot in terms of time. You're wasting a lot of time because you don't know whether this bullish momentum can carry on and break this level and continue to the upside. So all that patience and all that waiting can just go to waste. So my point is, when you've seen a move occur, okay, and then you're in on the 15-minute and you can see the 30-minute starting to create structure, these are your times to start executing. Okay, and obviously everyone trades different, but I'm speaking for majority of scalpers and day traders. So when it came to this position here, very simple, clear as day. you could have utilized your Fibonacci, for example, okay? So from this low to this high, for example, okay? And you could see how price actually respected this level of structure right over here. Clear as day, guys. You know, you could have entered over here, okay? But the amount of bullish pressure that had to be sort of returned to the downside and then price to be taken off from that area was too obvious, okay? This was obviously, well, 5 a.m. must have been news, okay? And if we were to look on the small time frames, like the 5 minute, this is how you start getting the sniper entries, lower drawdown entries, okay? So you can see here, clear as day, guys, we have support, support, resistance, resistance. Now, when I find myself with around 3 or more structure points that are opposing, so let's just say 2 support levels, 1 resistance level, that shows that that's a potentially a strong established level of structure. So somewhere where we can take a trade-off. So understanding the fact that we'd actually made a higher high over here and broken these levels of structure, all we had to do was just wait for the buys to be ready. So again, we've come from here, low, lower high, lower low, lower high, lower low, still a lower high or a double top, but then price made a higher low and then a higher high. Now, what is this over here, guys? Does anyone know what this chart pattern is here? If you guys know, type it in the chat, just so I know in terms of, okay, in fact, I just gave it away there pretty much. Okay, someone DM me there. Yep. Head and shoulders. Okay, great. So yeah, shoulders. Yeah, perfect. So exactly, we have basically a left shoulder, a head, and then a right shoulder. And where did this occur? This happened roughly around our 4-hour level of support and resistance. Simple. So we're looking at these higher time frame structure points, guys, and then we're zooming into the smaller time frames and we're waiting for that shift to occur to tell us that price is now ready for the either bullish momentum to start applying or it isn't. Because if price didn't form this inverted head and shoulders, okay, on the 5 minute you can see it clearer. Left shoulder, left shoulder, head, right shoulder, breaks to the upside, and then we wait for the retest of the neckline. So very simple. If we were to trade a head and shoulders, any way you want to trade it, you want to see the left shoulder form, the right shoulder form, sorry, the left shoulder, the head, the right shoulder, okay? And then we want to see that break occur. That break will imply that price is ready to go to the bearish side. And now all we have to do is wait for that retrace to that level of structure before taking that trade to the downside again. And this gives us a lot more confirmation rather than just selling right over here, okay? Because you don't know if price is actually going to fake out at this area or not. Pricing start coming down and then just start going back up again and create just a simple base at this level. So we always want to wait for the break and then look for that retest. Very simple. Okay, cool. So now that we know that, simple, we've had a level of support, 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 resistance right here. Now price came right into this level, okay? Wick rejection, number 1, signs of bullish momentum kicking in. Price came back here and clear as day, guys. You can see that three bar reversal, or if you want to just call it a 5 minute engulfing. And if you wanted to enter, you could have entered right over here after the 5 minute engulfing with your stops below this support resistance level, a 30 pip stop loss, okay? And you could have looked to target this high for a 1 to 2.6. A 1 to 2 is roughly the minimum that we're looking for, okay? But as you can tell, price had pushed down from this level of structure, and overall, we could have targeted this level of structure anyway. So if you were to target this area over here, in fact, let's just show it again, how this would have looked on the smaller time frames. So prices come down here. Yep, clean setup, exactly. Break and retest, smaller time frame. So prices come down here, wick rejection, okay, 15-minute bullish candle, which is also the 5 minute engulfing. Enter on the 5 minute engulfing as it closed, stops below the previous wick low, because that wick low showed us how far price could push down before showing the opposite momentum. Okay, so let's just maybe put our stops there, 25, 30 pip stop loss. Okay, I don't want to put it too tight because price can obviously revisit this area and then push to the upside. And then we could have had, look, take profits at this high over here, or extended target up here for a 1 to 5, and then then we just see how that would have, you know, played out. So you can see that momentum kicking in straight away there. And remember, guys, we had that Fibonacci in our favor as well. And another thing I guess you could have used, let's just see, potentially a trend line there. I don't really use them like that, but there was something there. You could have gone off. But again, let's just see how this played out. And you can see there again, look, price pushed to the upside, came right back down, retested this level of structure over here, and then started taking off once again. So a lot of consolidation there. You guys could have taken many partials there, or, you know, but basically you're in profit. You shouldn't take a loss at this point. And then you got, there's a target hit. So a very clean setup. And within that setup again, guys, you saw this next move here. So you could have used the Fibonacci again, and seeing that price is actually aligning our Fibonacci with the 50%. So a Fibonacci level aligning with a structure point, bread and butter, okay, textbook setup. And you can see how price, you know, came into this area multiple times. You could have had any entry along here just as a scaling if you really wanted to. Wick rejections, engulfing candles, all sorts over here, guys. Price closing above our support level. So anywhere around here you could have entered, you know, put your stops maybe below the 61.8 to be safe, and then look to target that same equal high up there again for a 1 to 3, or extended targets up there again for a 1 to 4. So I mean, you could have caught 2 setups within that, potentially 3 if you really want to be risky, but I wouldn't have gone for that realistically. And that was that setup right there. If you guys want to know, I actually had a buy limit here at 5:30, and it didn't get tagged. Yeah, look, 5:30, guys. Believe this. You know what? I'm showing the proof. I'll show you the proof right now. I did it and I deleted it like about 10 times. I don't know if it's going to focus or not. Okay, it's not focusing, but all those are buy limits. And as you can see, it also 0 because I deleted it. Obviously that because it didn't get triggered, but at 5:30, it was literally like, it says here that I got it triggered, but it didn't. I don't know why, but it just didn't get triggered at 5:30 exactly. That was my entry, my buy limit. I just knew that price was going to hit that level, and I had a stop loss ready set underneath the yellow zone. So yeah, that's just a simple breakdown on GU. Okay, and moving forward, what can we expect? Okay, so now that price has had, let's just go to the 30-minute now. Now that price has had a very, you know, clean reaction of this area, what we can expect are a couple scenarios. So I'll be looking for price to come back into this level, show signs of rejection, the same way price showed rejections up here. Price came up, came down, came up, engulfing, and off we went. So I'll be looking for price to come back up into this area and hopefully reject and, you know, show us that the sellers are going to start being in control. So then we can hopefully take price to the downside. We can look for a 15-minute engulfing or anything, but simple double top will do the trick. And then once we can start breaking below structure points like this over here on the 30-minute, high chance that we can start trading lower. Okay, and hopefully if that's an impulsive if that's in an impulsive manner, then we'll know that we're on the right side of the market. If price happens to sort of trickle very, very slowly like this, and it's low volume, that's just showing that price is wanting to go bullish. So there's a very high chance that price can go to the upside. So that's a very simple breakdown on GU. I would wait for simple double top at 1.11, let's call it 200 to form potentially, so we can trade lower. Or very simply, if this level just breaks to the upside, we can look for that retrace again to then take price higher and aim for this structure point up here. Okay, very simple. So break and retest or a double top. Just got to wait for the right entry signal so price can develop. So that's GU. Let's just quickly move on to GJ. If you guys want me to go through any pairs, I'll just do them as well. GJ, very similar to GU. Okay, we have a few areas here, which I don't know why I've marked up there. Just get rid of them, probably old. Okay, daily candle, very strong engulfing candle, right as we've basically come to the downside, closed back above this level of support and resistance, come right back down and retested this level of support as support again, and we printed a daily bullish engulfing candle. So there's a high chance that on the smaller time frames now, like on the 4 hour, okay, what we can see is a clear as day structure point over here again. Go to drop down to the 1 hour. What I can do is I can mark up this area here as well, just because it is a level of support resistance, supply and demand. And if we really wanted to, we could do this level here as well. Okay, let me just change these colors. If you guys have any questions, let me know. 1 hour. So when it comes to GJ right now on the 1 hour, you can see that we've clearly broken above these structure points here at 162,500. Nice round level. Okay, we have actually retested that a little bit there. Okay, as a quick retest. So in terms of overall direction, I would be looking for price to sort of retest it again, create a nice double bottom before potentially hitting 164, let's call it 164,400. Okay, very simple sort of potential move right there. But bearing in mind, we've had a lot of bullish momentum here. So I would expect price to potentially pull back a little bit deeper than this, just so it can just so it can fuel the move to the upside. Because if price just keeps on trending upwards like this and making mini higher lows, it just screams that price wants to do, you know, a bigger pullback or even a change of trend. So I would be looking at, just in case, I would also have my eye on, let's just see the 1 hour, very clear there. A little level here, midpoint 161,550, let's just call it. A nice wick rejection at this area and clear level of support and resistance there. So we don't need to overcomplicate it. We can even do like a Fibonacci from this high, this low to this high, and understand that the 50% lines up with this area. Great. However, you know, you don't have to use Fibonacci. It's not the core of our trading, not the foundations. But what we can see here as well is price breaking above the structure point, closing above it. Is it closing the 4 hour? Yep, on the 4 hours close as well. So very simply, we can just look for a little retrace into this area here before price takes off, or we can look for a pullback into this area before price goes off as well. If price starts to break below here and it starts showing a lot of impulsive characteristics the same way this area has, okay, I would then start to look for price to sort of break underneath, retest this level as a lower high, okay, and then start trading lower and lower. Okay, so if you were to take the trade up here at, let's just say if you took the trade over here as price broke under, so something like this, broke underneath the structure point and then came back up, a wick rejected a few times, and then showed a 15-minute engulfing, for example, and you entered, I would very much look to take partials or some sort of profits at around this area, and that way you're looking at potentially a 1 to 2 anyway. So you're covering yourself, you're covering all bases there. So, but then again, if this is an impulsive move, you've done well, because price will then most likely look to target these lows over here as well. So just a potential setup right there for GJ as well. And finally, we'll go over to gold. Let's go over here. Gold, pretty choppy, I'm not going to lie. Let's go to the weekly time frame. So weekly time frame, there's actually a bit of structure here which we can use. And I did actually call shorts around this area before. Remember, guys, if you have any questions, let me know. We've only got about 7 minutes left, so I'll just sum this one up quickly. And I'll just answer a few questions at the end. So like I was saying, over here on the weekly time frame, we have very clear structure. So we've had lower low, lower high, lower low, lower high. We call this lower high out here on the free channel. You can guys actually scroll up and see that on the free group, on the Telegram group. Then we made a lower low, and we've actually now come back into this previous lower low and retested it almost as like a lower high. Wick rejected and starting to potentially push back to the downside. So what we can do here is just sort of plot our horizontal line just to give us an idea as to where price is. See support there, and jump down to the daily time frame. And what I'd look for here now is I'd just sort of readjust this a little bit, and I'd see that price has actually made like kind of a low here, lower high, lower low, then had a very deep retracement taking out this level of structure here. So I would be looking for price to sort of then, if price is actually going to respect this move to the upside, okay, you can see how impulsive this is, guys. You can see all the blues there, right? And you can see how many reds it's taken to come back down to this half of this level. So 1, 2, 3, 4, 5 or 6 candles it took to move to the upside, this much, but it took 1, 2, 3, 4 candles to move halfway, half that amount. So that just that is a very good indication as to where price is going. Someone's asked, are wicks considered a break of structure? For me, I like to look at the bodies personally. If you're looking at maybe like the daily time frame and you see a wick to the upside, maybe on the 4 hour or the 1 hour, well, definitely in the 4 hour, 1 hour, that'll be a whole body break. So it depends what time frame you're looking at it at. But as you can tell, if we're looking at the daily time frame right here, we can see lower lows being created and lower highs through the bodies only. We don't really need to look at the wicks too much. And as you can tell, with this move to the upside, we've actually taken out this little bit of structure here to the upside, and now we've come back down to sort of retest some sort of level around here. We have to figure out which level it's retesting and what chart pattern it's forming. Okay, so very simple. Go to the 4 hour time frame, and now I'm going to plot down my 3 main points. So obviously my 1 main point is right over here. I'll just put a horizontal line here. Okay, we've got this low over here. We've got our ultimate high up here at 1713, let's just call it. And then we have this mid-range over here. Okay, this middle range here. So we're just giving ourselves a nice bit of guidelines, or let's just call it boundaries for price to bounce from. And then we can see what price does from there. So what I'd like to see with gold is I'd actually like to see price retest this level once more, potentially giving us a bullish entry signal before looking to take price up to this level over here, because you can see how impulsive this move was, taking out all the structure here. So again, if we align our Fibonacci with it, you can see that this is actually a 61 golden zone retracement, and price has actually come in here and actually had to consolidate a little bit, which is a good sign of price potentially having to trade the other way. So if we look on the 1 hour again, we've had a nice double bottom, but we failed to break this high. So whenever we're seeing these chart patterns and they're not actually following through, it can indicate that price isn't ready for buyers just yet. So therefore indicating that price may have to go lower. So if price now starts to break underneath my 1659 level, okay, I would actually look for price to break it. And let's just call it 1660. I would actually like price to retest it and then go back low into potentially these areas on the 1H. That's pretty much it with gold. Just, it's all about waiting to see what happens at your level. If you start seeing engulfings at your area, or wick rejections at your area, double bottoms, head and shoulders, double tops, breaks of structure, trend line breaks, when you start seeing these little things, these are clues to tell you which way price is going, and then you can start refining your entry and getting a better entry there. So that's pretty much it, guys, for the breakdown right now. Just wanted to say a few more things before we're done. If you guys enjoyed the breakdown, let me know. How was that overall, GU, GJ, and gold? And I also want to say, guys, as well, I'm sure you guys have seen me post it on my Instagram. I am taking accounts on, appreciate Carlos Fire. Yeah, I'm taking accounts on to pass phase 1 and phase 2 with Blue Forex Funds, First Class Forex, which I'm recently been funded with. Okay, 200K now. And they are a new firm, so do your research with them. And we also do the Funded Trader. We have 2 more firms coming, okay, in the next week, so stay tuned for that. But yeah, if you guys want to get funded, hit me up. Really helpful. Thanks so much. Appreciate it, Ollie. Do I have a course? Not yet. I'll probably develop, create it soon. What's something that helps you avoid getting wicked out or gives you more confirmation to enter? Recently, I've been entering a lot more aggressively, just based because of experience. But what helps me getting wicked out is initially starting with conservative lot sizes, keeping your risk low. So if you start keeping your risk low, giving yourself your stop loss, a little bit more room to breathe. So not skimping for pips in terms of smaller stop loss. So if you were to enter here, let's say you entered around here, sorry, wrong one. If you entered here, let's just say for this double bottom, and you put your stop loss right underneath that low, it's just, you might get a better risk to reward, but there's a higher chance of you getting wicked out. So always look to put your stop loss a little bit underneath the support resistance level. As an unexperienced trader, if you were to send out a signal call, how do we know whether to hold or take profits? So if you want, you can just DM me. I'll tell you how the signals work. But the minimum we look for is a 1-to-1 risk to reward, because I'm sending signals out every single day. And if you are a trader, you know that's not how you're supposed to trade, really. But the signals room is mainly for people who want to either flip accounts, pass challenges, grow their accounts slowly, personal accounts, that is. So you have to understand that you have to make yourself a take profit system. But overall, that's a good problem to have. You know, you'd rather want to have a problem where you're taking profits rather than figuring out where to put your stop loss, or, you know, cut your trade halfway, because a lot of traders do that as well. So I would say things like look to take majority profits that are take profit 1, or move your stoppers to break even as soon as take profit 1's hit. And even yourself, you can look through the signals room, look at the signals room, and then have a look and see which take profit gets hit the most. I mean, if you guys see, you know, majority of the time take profit 1 gets hit, and then take profit 2, and then occasionally you'll get the take profit 3 or 4. So yeah, that's pretty much it, guys, for the breakdown. And for those traders that are in the signals room, yeah, just have a look at the take profits that are hit and go based off that. But right now we're killing it. Again, if you guys want your challenges passed, I'm doing that too. And that's pretty much it. I'll upload the breakdown on the free channel, and I'll catch you all later. Okay, appreciate it, guys. Stop sharing the screen. All right, guys, I'll see you all in the next one. Peace.